Welcome back to the channel, everyone. On today's video, I'm going to be discussing two US stocks that I've recently added to my portfolio. Yes, the market's been going down, but I'm not afraid to grab these good prices and lock them in, because in 5 years time, I guarantee you that they will be up much, much higher than I've bought them now, even if they do happen to go down in the near term. But before I get into the two stocks that I've added, I just want to talk about the market as a whole right now. On the screen here, I've got the year-to-date performance for the Dow Jones, the S&P, the NASDAQ, and the TSX. So as you can see, the Dow's down almost 9%, the S&P's down almost 12%, the NASDAQ, the most popular index, is down almost 20%, and our Canadian TSX composite index is only down 0.33%. Who would have guessed that? Well, you know, at the beginning of the year, I did put a video out with my stock market predictions for 2022, and my prediction was that this was going to happen, that the Canadian index was way too undervalued. The value was so deep in a lot of our Canadian utility and bank stocks, even the oil sector, that it was my opinion that there's going to be a sector rotation from the highly valued US tech stocks and Dow industrial stocks, and it's going to rotate over to the Canadian side, and that's kind of what it looks like is happening at this point in time. But the year's not over, guys. It's only March when I'm making this video, so there's a lot of runway to go still. All right, so the first US stock I've recently added to my portfolio is Starbucks. All right, so this one has had a major sell-off, a major drop from where it was. It started the year at $116, and it's currently trading at $82.50. Now, I did buy it in two separate occasions. I recently purchased just under $1,000 at the price of $87 a share, and I put another $1,000 in recently at $79.20 per share. So I'm down a little bit. Like I said, you know, short term, you might not catch the bottom. Things can go down, you know, even another 10%. And I'd be okay with that, because I know, you know, given some time, given a year or 2 years, 5 years, I will be up and it's fine. This is a great compounder right here. Over time, Starbucks is proven to be a great dividend grower and just capital compounder. We're going to take a look at the financials just quickly here to show you what we're talking about. At today's price, we're going to lock in a 2.37% dividend yield. Okay, so that's not that high, but like I said, there's a lot of room to grow, because if you look at the payout ratio, it's just under 50%. So there's obviously a ton of room to go much higher. The trailing price to earnings ratio for Starbucks is 25, and that's very high, but you need to remember that you're buying this name brand. You're buying a legacy that's going to outlive you. Generations to come, your children are going to be buying $7, $10 coffees from Starbucks, okay? So Starbucks is forever. It's a name brand like Coke at this point. It will just be around, and it's going to have many years of dividend increases for those of us who are excited by such things. The current dividend yield is 2.37%. So, you know, this isn't that exciting, guys. This is kind of what we can expect from this type of a sector. It's a good starting position, and every year it should be increasing with their profits. If we take a look at the 5-year average dividend yield, it's only 1.82. So this is an indication that the stock could be undervalued, but it depends on how you interpret it. We just talked about the price to earnings. You know, 25 PE is closer to Apple than it is to 3M. So it all depends on how you want to value things. I think this is a good place to put some money in. Obviously, I put my own money in, and to be honest with you, I don't have a lot of free cash flow right now, because I just had my first child. I'm off work right now, so I'm trying to not spend that much money. I'm trying to not invest that much money, but I'm addicted to good value. This is an exciting opportunity. I really believe in it. I just want to give you guys that background to show you that even though times are a little bit tighter for me right now, I'm still buying and I'm still investing in this great company. We're not going to do an in-depth analysis of Starbucks here. I'm just going to take a look at the revenue and basic average shares. I want to point a couple things out. So you can see year by year that we're making increases until the pandemic year, which was a big decrease. However, in 2021, the slowdown of the pandemic, let's just call it, that they're at all-time highs. And if you look at the trailing 12 months, they are at all-time highs. So the stock is trending up. I mean, a once-in-a-generation event could, you know, slow profits down. I think no one's going to hold that against them. It's done really well. This is a very resilient company. If you take a look at the basic average shares from 2018 to current day, you'll see a big decrease happening as they're aggressively purchasing outstanding shares until the pandemic year, where it raised slightly, not even that much to be honest with you, but you know, now we're coming out of this and they're going to be aggressively buying back even more shares, which creates a lot of value for shareholders like you and me. So we're getting revenue increasing year over year. We're getting a lot of share buybacks, increasing our value, and we're getting dividend raises, increasing our passive income. So this stock is a 10 out of 10 for me. If this is the value that you're comfortable with, I would hop in. Okay, guys. So that's my first stock that I just bought, and I'm gonna dive on in on the second one. So the second stock is Apple. I'm sure you guys have heard of this one before. It's currently trading at a PE of 27, so slightly higher than Starbucks, but for good reason. You can see the market cap is almost $7 trillion. This is a beast of a company. You probably have their products in your house. We're not going to go over too much about who they are. I do want to talk about dividend yield because that's one of the big things we do here on the channel. Now you'll see it's just a minuscule dividend yield here at 0.57%. This is almost nothing. And I understand, guys. However, Apple's been raising year after year. If you've held this thing long enough, you're getting a 4 to 6% dividend yield. So, if you just hold it as it compounds over time, you'll get that yield up to where you want it. It's not going to happen in the short term. But if we take a look at their payout ratio, you'll see it's almost nothing. They are paying out almost nothing here, guys. 14% payout ratio. All right, so that just gives you an indication of how much room they have to raise it going forward. This is as ideal as it gets. This is close to what Visa has. This is almost nothing. So if you hold this over a long term, you're going to get huge dividend increases in the future. Up on the screen here, I have the financial summary for Apple. Yet again, we're just going to do a soft overhead look here, not a deep dive. If we take a look from 2018 to current day, the total revenue is just blown out of the park. It's absolutely ridiculous. It looks like these numbers are inputted in error. They're so high. Okay, so this is what I'm talking about. You can't get these type of numbers in any other company. You got like Google, Microsoft, and Apple doing these type of numbers. That's about it, guys. Starbucks had very impressive numbers, but it's a totally different industry. So we need to keep that in comparison to like Tim Hortons Restaurant Brands International stock. It's not comparable. You can't get this type of numbers here. And we see the same type of story when we're looking at the basic outstanding shares. We go every year. Look at this, 19, 18, 17, 16. All right, so you keep holding this in 5, 10, 15, 20 years. How many shares are going to be left? These shares are going to have tremendous value. They're going to have a tremendous dividend yield. So long term, guys, you buy Apple, you're going to do well. That's all there is to it. They're going to keep innovating. There's been talk that they're going into the electric car manufacturing space. Who knows what's going to happen? No one saw the Apple AirPods coming until they did, and now those things sell billions of dollars a year. So, I mean, this is a good buy at pretty much any price. I bought Microsoft recently at like $312. It's down at $280 right now. That's a great buy, but for today, guys, I think Apple is a great value and Starbucks is a great value. Those are the ones I'd be getting as of March 15th, but every day is different. Everything changes. Let me know what you guys are adding to your portfolio. Also, if you have any negative information about these two companies, I'd like to hear it. I don't see anything negative for Apple. Starbucks, there's a maybe. There's a lot of talk of unionization for that company. That could be a headwind depending on where the buck lands on that. So we'll see, but I'm still confident investing in it going forward. I hope you guys are doing really well in this market. You might not be because it is a bit of a down year to start 2022. Just stay strong, stay investing, and just average down on these great prices, guys. We'll see you in the next video. Thanks for watching.